Welcome back to Bazaar Morning Call. Well, for now, the market actually is in very good shape. The Nifty is picking up more pace now, getting almost to that 17,900 mark. Just look at that. And if you look at the contribution plate, you'll realize that the big, chunk of the heavy lifting is being done by HUL, Bajaj Finance, Bajaj Finserv, so the Bajaj twins, and you have a couple of other names, Tata Consumer, and Reliance is back above 2670, so Reliance also looking pretty good. All right, Sterlite Tech posted yet another weak quarter. The company has seen its third straight quarterly loss. Margins are at 7.5%, sharply lower year on year, and well below the steady state of margin guidance of 16 to 18%. Ankit Agarwal, who is the MD at Sterlite Tech, joins us now to talk about that. Ankit, good morning and thanks for joining in. You know, the margins are the big problem, right? 7.5%. It's significantly lower than your steady state margin guidance of 16 to 18%. I agree there are higher freight costs, there are raw material cost pressures, etc. But how long do you think it would take before you get back to that 16 to 18% band?
Yeah, good morning. Thank you for having me on the show. So I think what we have been guiding so far is that certainly the cost pressures that you spoke of in terms of container costs, some of the raw materials linked to oil, as well as in terms of other gases like helium, etc. Some of those impact have come in on Q1 and Q2. And we've been speaking about impacting this, taking these price increases to our customers, especially across Europe and US. So we do see some benefit of that starting to trickle in into Q2 and certainly into H2 is where we are guiding that we'll see the improvement in the margins. And broadly, what we are seeing is that especially on our core business, which is the optical, we will come back to 20 to 22% EBITDA margins. And our services business, which is the second biggest business, will move from around 8-9% margin to around 12 to 13% margin. So this is how we see the margins improve. And certainly on a run rate basis, we do expect Q3 and Q4 to be stronger.
You think Q4 to be stronger, Ankit? Good morning. But I think earlier you had spoken about 16 to 18% as the margin guidance. When do you reach that number again?
So that's what we had guided towards H2. So certainly we are confident that overall basis, given this mix, about 70% of our business will be optical and about 30% of our business will be services. So that kind of combination of the two businesses will get us to 16 to 18% between Q3 and Q4.
That's on the margin. On the revenue itself, you're still lower than the pre-COVID revenues. And your guidance clearly looks, the 10,000 crore annualized looks unachievable. So what's the new guidance?
So what we have been guiding, rather than looking at 3 years, we are focused on the improvement on two elements. One is the margins that we spoke of, and also in terms of cash and looking at our net debt levels at company level. So these are the two priorities for the business. What we have guided is that overall year on year, our top line will grow around 20 to 22%. So roughly in the range of around 7,000 crores. So that's something that we are confident that we're tracking on the back of 2 or 3 elements. Number one being our volumes will continue to grow on increasing cable volumes and fiber volumes. Second is also growth of our optical interconnect business. And as that attach rate improves, our top line should improve. And as we see large projects coming on stream, both on the back of 5G and BharatNet, we see our services revenue improve as well.
Okay. So, the order book overall has been declining, right? I mean, even in this quarter, it declined about 4% compared to last quarter. Is there any reason? Is it specific to your company? Are you losing orders? Or is overall the client spends going down?
Actually, we actually recorded one of our highest ever order books. We actually booked close to 2,800 crores of orders, which was a back of very strong orders coming in, particularly in the US market and Europe. And then to some extent in India with some of the leading operators. What we actually did is on the back of our previous guidance and our strategy, we've actually written off some of our lower margin orders in our conversations with customers. So close to 1,600 crores of low margin orders we have written off. And hence you see the net number of about 11,000 crores, which is our open order book.
Okay, a word on your net debt. That also increased to 3,200 crores in Q1 from 2,780 crores at the end of FY22. What's the outlook here?
Yeah, so that's what we are seeing, that on the back of very strong growth, particularly in North America, our working capital has increased. And so that's something that we're looking to do while we continue to grow in that market. We have close to 14% share now. We continue to evaluate in terms of our capex spend, which will be close to about 500 crores this year. And on the other side, we are clear that we want to reduce our net debt from here and bring it back to between 2,800 to 3,000 level. So that's something that we're targeting by end of quarter 4.
So when will you raise that 1,000 crores that you got an approval for in terms of a timeline? What are we looking at?
So that is just an approval we get on an ongoing basis, and we'll continue to evaluate. The focus right now is to generate cash from the business and then use that cash for either capex or for reducing the debt.
Okay. Your US facility will start contributing, right, from this quarter, I think. How much contribution do you expect from there?
No, the facility will come on stream in quarter 3. We're quite excited with that factory coming on board to serve and grow our presence even further in the North America market. So that will start in quarter 3 and scale up by quarter 4. So that's something that will further add. And overall, with all of this, our capacity will go on the cable side from 33 million fiber kilometers to about 42 million fiber kilometers, and will make us one of the largest players globally.
Oh, okay. Optically, as you said, I mean, you're still reporting a loss, right, on the bottom line. And it's been 3 quarters of losses now. When do you think you can turn back into the black in terms of a timeline?
So that's what, in line with our first few statements, we definitely believe it will move in positive direction as we go into quarter 3 and quarter 4. And that's something that we are very closely watching in terms of margins as well as the cash. One thing I do want to highlight is that, from the market perspective, we clearly continue to see very, very strong tailwinds, particularly in terms of our conversation with telecom operators, both in India as well as globally, on the back of 3 trends. One is clearly on the back of 5G. We see next 3 to 4 years massive investment as more and more towers need to be fiberized. We also see a very large focus on fiber to the home connectivity, again, both in India and globally. And the third part is very, very strong focus from governments to now fund and subsidize broadband connectivity, like we have BharatNet in India, which is probably a $10 billion project. You're also seeing a $60 to $70 billion project in the US right now, again, to provide fiber to the rural parts of America. So these are very, very positive trends that we see very strongly, both for our fiber optic manufacturing business as well as for our services business.
Okay, Ankit, we leave it at that. Thanks a lot for joining in. It has been a challenging last few quarters for you, but you seem optimistic. So let's see